Market internals, Peter, I note here that the number of stocks on the rise, that percentage is falling, and the number of stocks falling is on the rise, which means breadth is narrowing, which puts a lot more emphasis, I think, on what happens with the Mag 7. And here it's not so much we've moved beyond the capex numbers, whether they're continuing to ramp. I think we're watching more closely, how they're actually going to pay for it, how much leverage is involved. What sort of sense are you getting right now?
Well, the numbers are just truly extraordinary. And to quantify, Oracle is spending about 50% of their revenue in capex, not 50% of cash flow, 50% of revenue. Microsoft, Meta, their capex numbers are about a third of revenue versus mid-teens pre-2022. So we all, of course, hope that this level of spend pays off, but the numbers are so extraordinary that it's hard to believe that it's going to any great extent. I mean, whether it's the reminder of fiber optics in the late 90s, whether it's railroads when we built 5 different lines from one city to another, whether it was canals, this is just another iteration of that. And again, while the technology may be great for all of us, I think the spenders and the build out of this infrastructure, I think it's inevitable that we're going to overbuild, which means that if this technology is really going to help and change people's lives, I think from here on going out, the beneficiaries of that are going to be the users of Gen AI. It's going to be the households. It's going to be the businesses that integrate it into their daily lives rather than the extraordinary spenders that's taking place right now, and the companies that are marking this capex a level up to such an extraordinary amount.
I hear what you're saying, Peter. So the users, the end users. So, if you take that old Field of Dreams analogy, if you build it, they will come. That's what we're talking about, the actual users, right? But, I mean, there are still open questions over end demand, are there not? And, folks who are a little bit more cautious like yourself would prefer investing upstream AI in the picks and shovels, in data centers, and even in energy, because, I mean, regardless of whether end demand is there, they still need to build the stuff, so they're insulated from that point. You don't agree?
No, for a period of time, and we've taken that angle as well as the picks and shuffles. Part of the investment thesis is probably a safer way to go. We've been doing it more through nuclear and natural gas, even though nuclear really hasn't had much of an impact powering data centers just yet, but I think that is only going to grow from here. But I worry about us having empty buildings in a couple of years. I mean, you take the Meta facility in Louisiana, that's going to be 4 million square feet. That's the equivalent of 1,700 American football fields. It's just an unbelievable size. And if there's one experience with technology, is that things get more powerful, but they get smaller. And you need less size. I mean, the smartphone in our hands is doing the work of an IBM mainframe was doing 50 years ago. So who's to say we're going to need all 4 million square feet? So yeah, it's great right now, and everyone's excited about the technology, and the technology is going to only improve from here, but do we really need all this space? And I think that's going to be the big question, and I'm just fearful, just based on historical precedent, that we're inevitably going to overbuild.
And Peter, I don't know, maybe it's because we're just days away from the APEC meeting in South Korea. When you talk about your commodities that you like here, precious metals, platinum, oil and gas, uranium, and fertilizer stocks, I don't know, there is a very strong geopolitical scent. Can you just walk us through why you like these types of commodities at this point?
Well, I think with so much capital spending over the past, not just a couple of years, but call it the last 10 to 15 years, it's been very focused on technology. And there has not been enough investment in the critical minerals that are powering this technology, whether it's copper or it's nickel or it's silver. Or even oil prices, oil, for example. There's been, while oil prices are obviously very low right now, people are worried about the demand for it relative to the supply. Big projects haven't really been invested in over the past couple of years. And that's not me saying that. That's the CEOs of a bunch of big oil companies, particularly Exxon, which talked about it last week. So I do think that there's a commodity bull market that's going on. Now, it certainly has been going on in gold prices, that's for sure, and silver and platinum and some others have caught up. But these are really important things that many countries, particularly the US and China, realize they need to get their hands on it.